Levels. Let's look at the flows. Kevin Green joins me in the options corner. KG, we are in day two. Nice little stampede. Do you like it?
Yeah, definitely. If we can actually close at the 5,600 level today, that would actually be an ultimate win here for the bulls, Oliver. And that would probably get us to that next area of resistance, which is going to be 5,650. That's where we actually did see a significant amount of roll up and roll out activity, not only for tomorrow, but also going into next week. That's ultimately bullish. But I do have to say the put buyers, they're still there. It's not as aggressive as we saw last week, but we are still seeing some put buyers out there, still hitting the 5,500 puts. And then there was just an order that just came through for the 5,430 puts expiring in 2 weeks. So I think for now, we are in a really good territory here. If you are a bull, we are only a couple of points, maybe 40 points away from trying to break the neckline of the that double top that we had. And if we're able to break through that on very large volume, we might be able to continue to inch higher here going into the remainder of the year.
Yeah, the levels above 56, I mean, it seems like that's going to be a battleground, right? Like that could be a tough one there because we were stuck there for, what, a week?
Yeah, so here's the flows that I've seen come through today to give you a little bit of context. So 5650 is the first one that we're seeing a lot of activity on. Tomorrow's expiration alone, we saw about 11,000 contracts being traded. Now, you might say, well, that's not a lot of contracts, but you got to also remember 65, almost 70% of total options being traded for the SPX are now in 0 DTE options. So that's actually a considerable amount to be rolling up and rolling out. And we still have 28 minutes left to go in the close. We did see somebody also hitting the 5720s. That's going to be a little bit farther out, late October. So that's once again a little bit bullish. And we're talking about these are being call sellers. So these are really institutions that are collaring positions. And when we see individuals and institutions rolling up their calls, their short calls, that means that they're trying to give themselves some room for their equity portfolios to be able to move higher as well. So ultimately that's bullish. But we have not, once again, we have not seen the put buyers completely fall off the map here. There's still buyers that are out there. It's just not as aggressive as we saw last week.
Well, that's probably good, making a two-way trade, keeping it alive a little bit. If not everybody's on one side of the boat, it doesn't sound like they are at this point.
No, not yet. I mean, you did see a nice little downside move when it came to the VIX. So you're starting to see the skew, the downside skew, starting to level off here for now. Obviously, we do have tomorrow. It's going to be a Friday expiration. We do have the University of Michigan sentiment data that can actually move markets either to the upside or downside. Yeah, maybe. But I would say it's a little bit more leveled out than what we've seen in the past.
What about the 1 p.m. slip at 1:30 p.m. slippage today? What was up with that?
Yeah, no, that's a really good question. You know, when you start seeing that type of...
It's a weird candle there. We could barely see it, actually. Yeah. Sorry to interrupt you, but it's right in the green, so folks following along might have trouble seeing it. But yeah, it's kind of a wicked little candle.
Yeah, so you could have a situation. So the 5,600 level right now, if you're looking at actively traded contracts on today's session for today's expiration, we're already at 108,000 contracts being traded. That's probably the largest that we've seen in a couple of weeks there. So there's definitely a wall that has been that's been approached, and we might have seen just an unwinding of that 5,600 position a little bit and selling down. But also on that chart too, and I know it's a little bit difficult to see, but if you look at that 20 period moving average on the 15-minute chart, I continue to bring this up. If you look at that candle, the bottom wick of that candle literally touched that 20 period moving average, and we bounced right back off of that, which is why it's a very key indicator if you're an intraday trader or if you're a swing trader here. And so I think that was just more of a decoupling event that took place. We could have another a fail here. I don't want to kind of be too overly bullish. What you don't want to see is an unwinding of those calls, and then we start to move to the downside. If we were, what I would focus on is the 55.85 level. That is actually an area where those call buyers earlier this morning still have a significant amount of intrinsic value, and there's a lot of volume there. And so if dealers really wanted to try to squeeze that premium, they would try to sell it off and try to pin the market at 55.85.
Oh, nice. Cool. Good eyes. Like that. All right. Because that's kind of one of those levels that's like, it doesn't show up anywhere on the chart, you know, from a technical perspective. That's like the pure gamma stuff, basically, you know, thinking about where you might find that near-term support if we slip a little bit. And that's not too far off. That would still be a good day, right? If we slip back down, what, like 10, 12 points?
Yeah, I mean, if you kind of look at it, a good day would be for us to close about 55, 58.
Exactly, like anything positive, basically.
Exactly. Yeah. So if we go to that volume chart, you'll actually see some of these intraday levels. And I do highlight on there that 55.85 unwind risk that we could have in the market. But yes, there is actually a trend line that we have on the today chart here that where we would hit would pretty much coincide with that 55.85 level. Or even if we went down to hit 55.75, that would be ultimately a win and would actually keep this bullish trend that we've seen not only for today, but over the last three trading sessions.
Okay. All right. Good day here. Excellent day if we end like where we are right now. Good day as long as we just don't give anything back, which seems hard to imagine. I mean, look, anything can happen in 40 minutes, or 20 minutes, but we've got, pretty good buffer here after the fact that we didn't fade it down early. That to me was kind of like the test, especially because it was a little choppy early on after a big move like yesterday. The huge range from yesterday that we barely had any downside range in it. It's pretty impressive.
Yeah, it is. So let's talk about going forward and for next week. I think highlighting that is going to be very key here because it seems like it's all sunshines and rainbows right now, but we're not.
Well, I also don't think sentiment's huge either, to be honest. I feel like if we made the move, it was probably going to be through yesterday and today.
Yeah, I would say though the sentiment indicator for me right now is actually the 0DTE volume that we are seeing. That is different.
Yeah,
we're not going into days where it's been 45,000 contracts are being traded for the top contract. We're talking about 2x that.
I see. Okay, so you're just saying there's a lot out there, and that's the only thing tomorrow on the agenda. Okay.
Yeah, you have a lot of speculators that are now saying, okay, I want to dip my toe in. I'm willing to put in a little bit more risk on these speculative trades on an intraday basis. And so I would say the sentiment is there. But what I want to highlight is a couple of things. One, that move to the downside you talked about intraday, that could also be a liquidity gap that we have. And I would expect that we will see a lack of liquidity in the market between now and the Fed meeting on Wednesday. You have institutional traders that are actually rolling their E-mini S&P futures from the September contract to the December contract. We highlighted it earlier this morning. The cost of trade, or that roll cost, is the highest that we've seen in 2 years, Oliver. So if you have a wide spread there, that means that you have gappy markets. And the reason why you have wide spreads, lack of liquidity. So if we have a lack of liquidity, we can actually have days like yesterday and days like today. And so expect that same type of action just mechanically going into next week. You have options expiration on Friday. You have the AM settled options. You have the futures options. All of that's going to transpire there on Friday. You're going to have volatility risk. You're going to have time premium risk. There's a lot that's actually still going on.
All right.
I would just say for those bulls out there, you had a good run, and hopefully we continue to have a good run. But still stay defensive until we clear all-time highs. Still stay defensive.
All right. I've never been so happy to be wrong. Maybe we do get some big action around sentiment tomorrow. I'm just in it for the action, so I love to hear it. We got a lot of things on the highway, it sounds like, tomorrow that could be, very much live. So appreciate it, Kevin Green. Good analysis.